Good afternoon. This is Rich Nelson with Allendale, covering livestock and grain comments here. This is Wednesday. This is July 21st, 2010. For all the excitement here in the grains, you'd think that a lot of new changes were seen as far as fundamentals, but really there was not any change to speak of as far as some of the main drivers. We're still looking at weather. Midday updates, even the morning ones, still show we have plenty of precip coming here in the next few days. A light stretch of dry conditions may be set for Sunday through Monday, then rains resume here early next week after that. So for the most part, we do have some high temps still forecast. All areas are still going to be bouncing around this 90-degree area for some highs next few days. But for the most part, as long as we have ample precip, as we still do, looks like the weather is not a concern as far as the crop goes at this point. Outside markets, we see that the U.S. dollar up 58 and crude down about $1.12. Both those are actually bearish factors for grains. So the key question is, well, why did it have a rally today? And really the main answer is, of course, on the wheat side. We did have wheat start off stronger and continue higher through the day. I have the September Chicago up about 11 1/4 here by the end of the day as far as that contract goes. Key issues on that, we did get some more updates on these countries reporting lower production, and this has been going on now for a good 2 to 4 weeks or so. As far as all these countries, everywhere from France straight over east to Russia, reporting lower numbers due to that massive drought, which has covered a good chunk of Europe, the Baltic Sea area, as well as Russia. We've got the latest one as far as this morning, Kazakhstan bringing their estimates down. Last year they were 20.8 million tons of wheat. Looks like this year they're running 13.5 to 14.5 million tons. So that's one big driver here. Also, the confirmation that Russia has agreed to sell about 3 million tons of its domestic government reserves to its own domestic market to help supply some needs during its drought issue. And as you may remember from our commentaries from a few days ago, Russia's got a crop which is impacted. Roughly about 20% of its acres has been impacted by drought. So that's the key issue there. So with the running on wheat and little new news on corn and beans, looks like the wheat was able to pull up corn and beans here today. I've got the corn last trade up about 6 cents. Soybeans up about 5.5 cents. Out after the close, we have an average guess for tomorrow morning's census crush report. So keep in mind we get two different crush reports, one from the private industry called NOPA, that's around the 14th or 15th each month, and the government gives their take on crush around the 21st or 22nd of each month, and that'll be tomorrow, and that's called the U.S. Census Bureau's version of crush. Their estimating number about 6% lower is what they're looking at compared to last year, and keep in mind that's going to be maybe just a little bit less than what we need here as far as to meet USDA's crush goal. So that's the newest news we have here on the soybeans as far as that goes. Really, the biggest thing we talk about is really livestock here for today. A lot of news out in livestock, mainly in the cattle side. Over on that side, we did have a minor 32-cent higher close here for the August contract. One thing we will point out is cash cattle, as far as the bids at 92, offers at 96, still a wide distance between feedlots and packers. Bottom line, looks like they're going to wait until Thursday afternoon, more likely even Friday, to get business done here this week. And of course, while they're looking at that type of delay, one key issue here is we have two big reports out Friday afternoon for cattle. That monthly cattle on feed, and then the second one is the biannual cattle report, also known in the industry as the cattle inventory report. As far as the cattle on feed report, one thing we're all looking at is these massive increases in placements the trade is expecting. Average trade guess is for a 20.5% increase in placements in the month of June compared to last year. So keep in mind that'd be 2 big months of massive increases for placements. So it seems like a bearish issue. Maybe that's one reason why we're holding things back a little bit on the December and February contracts, because placements during June will finish out from late October through February. So that's why this is going to impact those deferreds and not the August contract here. As far as the other report, the cattle one, also called the inventory report, we're estimating the total herd size down about 1.2%. Looks like the cattle industry is in its 4th year now of contraction. And as far as the numbers we see here for heifer retention into the cow herd, down 1.7%. Looks like that contraction in this cattle industry is not going to change anytime soon. That means we're looking at year-over-year declines for beef production pretty much for the next 3 years straight here even. So bottom line, we've got some kind of mixed news on this cash side as we wait for the cattle and feed report, and that report is going to be a little bearish based on the placement number. However, kind of offsetting that is this big long-term report here. As far as the hog side, up $1.32, so we pretty much reversed those large losses here from yesterday. As far as news on the hog side, we've got cash hogs finishing up here today. That's a good sign. And also cash pork finished up for the previous 2 days. So it looks like it might have a small turnaround going on in the hog market. One thing we do have out tomorrow afternoon is that monthly cold storage report. And we're watching this one for not just the pork stock numbers, but also the breakdown of all the chicken in warehouses at the end of last month. And that specific category we're all looking at are the dark meat numbers. I mean, that's leg quarters, thighs, legs, things like that here. So as far as that goes, we've got a massive buildup in dark meat supplies because we can't export all of it. And we've got this other problem here with that competing in the U.S. With pork. So that's one reason why we aren't seeing massive rallies right now in this hog market, is all these concerns about excess chicken on this market here. So we've got those issues going on. So not only do we have a report out tomorrow with the cold storage, we also have 2 reports out for cattle Friday afternoon, cattle inventory, and also the cattle on feed reports. Get all those updates on the news reports and what they mean to markets by giving us a call here to Allendale. That's 1-800-262-7538. You can also send us an email, which is research@allendale-inc.com, or take a look at our website. Sign up for our reports, get our own in-depth analysis on these reports and what they mean to price on the website here. And that's Allendale-inc.com. This is Rich Nelson. Hope you have a good trading day and a good trading week.